I'm Owen Bigland. This is the Inside Edge video blog. Okay, let's talk about the difference between investors and speculators. I brushed on this a few times lately, but I've really got to keep pounding this home because we're kind of in a weird market these days. Of course, the real estate market is trending lower. Sales are down. Interest rates have gone crazy here. I'm getting some interesting comments on my YouTube channel here about, flipping properties. And of course, David Eby just announced a flipping tax here, which is completely useless. There aren't any flippers in this market and haven't been for a long time. There's lots of investors, but he doesn't understand the difference either. There's an article I recently read in Bloomberg, which I've had a few run-ins before in the past. They're just getting ridiculous. This particular guy has no clue about the difference between an investor and speculator. Because they're night and day. They're absolutely polar opposites. I'm an investor. The clients that I represent on buying investment homes, duplexes, condos are investors. They are buying the property, they're going to put a tenant in it, and they are going to keep it for long periods of time. 10, 15, 20, who knows, 30 years. I mean, you guys know I've got properties coming up to 35 years that I've owned. I'm not interested in selling them. Why? It's like killing the goose that lays the golden eggs for you. You let the investors let the leverage run, take advantage of it, let the leverage run, and it's tax advantaged. You're creating capital gains. Let the capital gains continue to build up for long periods of time. That's where the big dollars are made. I talk about it in great detail in my book, and I've also talked about it many times over the years on my blog here. So let me just read a quote here from Wall Street Journal here that I read out about a month and a half ago, just to set the stage here. This guy says there are two very different real estate investor stories that are currently playing out right now. Investors who invest for the long term using fixed rate debt with plenty of debt coverage and patient equity and are currently not panicking. Speculators who refer to themselves as investors who are panicking. And that's the difference. There are a lot of speculators and flippers out there who call themselves investors, but you're not. You're a joke. You're lying to yourself. Investors buy and hold for long periods of time. They understand how the tax code works. They understand how long-term leverage works. And they're not looking at to make a quick dollar. They're not going to play 2 innings of baseball of a 9-inning game, or even playing extra innings, which is where you make the really big dollars, as I'm going to talk about in a minute here. So, I had some comments in my YouTube channel. I had a guy that I went back and forth with. Listen, this guy sounds like a nice guy. He sounded like I was being harsh to him because he commented that, hey, I just sold, I owned the condo for 2 years, I made some money on it, sold it, and I'm going to go to cash or put it in a GIC, and then I'm going to buy back in another year or two or whenever when the market goes down. I'm going to buy cheap and get back in and make a lot of money on it. And how many times have I told you guys about this story? I talk about it in my book. This has been around for decades and decades. I've seen it firsthand from many people that have sold homes. They're going to ride on the sidelines and then buy back in. And hey, maybe it works out for you, but chances are it's probably not. And again, in this situation, let's say you made $100,000 on it. Congratulations. But you've got capital gains tax on that. You've got another $30,000 in real estate commissions. And then when you go to buy back in, you're going to have another set of PTT and another set of conveyance and lawyer costs. So that eats away at an awful lot of your profit. Let's say now you clear $50,000 or $60,000. I think if you would have held on to that property, played 9 innings or possibly extra innings of baseball, you would have made 3 or 4 times that much. I have. Case in point, I bought my first condo almost 36 years ago. I can tell you 4 years after I bought it, I was up probably 30% on it. People were asking me, do you still own that condo you bought 5 years ago? Of course. Man, you should sell it. Market's on a real tear right now. You could make some nice money on that. Why? Why would I do that? That's happened along the road with pretty much all my properties, detached homes, duplexes. Hey, you're up on it. Why wouldn't you sell it? Take the money, take your chips off the table. Well, the chips are going to continue to pile up. They're going to continue to pile up on these investments. Sure, I might get a couple of years that's down or flat, but over time, it's going to continue to grow. And besides, I've got good tenants in these homes. They're paying down most of my holding costs. I'm using the leverage, and it's tax advantaged. All these capital gains are growing tax-free for me. So, we went back and forth, and I told him, listen, if you wanted to sell, that's fine. But, I think you're kind of playing small ball there. The real money to be made is by hanging on to these properties. And the reason why I addressed his situation is because I want to make sure that people understand how this game is really played, what an investor is. This guy buying a home and selling it in 2 years is not an investor. That's pretty much being a speculator or a flipper even. Investors buy and hold for long periods of time, and that's where the big money is made. If you buy my book or if you watch a lot of my blogs I've done over the years, I want people to understand that. That's how I've done it, and I learned from the best. I was fortunate enough to learn from some excellent mentors early that, Owen, don't be tempted after you buy a property to sell it in 2 or 3 years if the market's gone on a tear. Keep it. It's small change you're going after there. Wait for the big bucks that will come. And they were 100% right. I've got homes now that I've been holding for decades that I never dreamed would be at these values now. And I'm certainly glad I didn't listen to people by saying maybe you should sell them, take your chips off the table, the market's headed for a crash, don't you know, and then you'll be able to buy back in a lot cheaper. Another one here. Again, this one is from Bloomberg. And this is the prime example of know the difference between the game you're playing, you're an investor, hopefully, versus the speculator or flipper or day trader. And the guy that wrote this on Bloomberg, not good. But again, I've talked about Bloomberg before. The people that write for them, they're getting paid by the article. A lot of them don't have a whole lot of financial background. If you want to learn about financial news and the markets, subscribe to the Wall Street Journal. Pay for the subscription. This Bloomberg stuff is free, but that's all it's worth. I get a morning email from these guys with their stock picks and everything else. It's free. But Wall Street Journal is far and away the best publication, and it's actually a great deal for Canadians. It's about $100 a year for an unlimited digital subscription. It's a fantastic bargain. But this guy, we're coming up to Thanksgiving here as I'm doing this video. So it's going to be a long weekend here. So the markets are going to be closed in short hours here. But he goes back to that holiday shortened week for a moment. While markets will be open until 1 o'clock on Friday, trading desks are typically thinly staffed right now, right after Thanksgiving. And investors don't enjoy holding the bag if there are any significant developments during what is essentially a long weekend. Geez, where do I start with this guy without not rambling on too much? Well, he doesn't know the difference between an investor and a speculator. Investors don't sell all their stock before a long weekend and then hope to buy it back in if something bad happens over the weekend and they can get it cheaper. Listen, I've been investing in stocks for 25 years. I follow the markets pretty close. On Fridays, especially going into a long weekend, you often will see in the last 10 or 15 minutes of trading a little bit of a downturn there. It might sell off, the Dow might sell off 50 or 70 points. Sometimes more, depends. Because yes, over a long weekend or even any weekend, some bad things can happen. You've got the war going on in Ukraine. You could get a terrorist activity. You could get more shutdowns in China with COVID. There's a myriad of things that can happen that can cause the futures market over the weekend to go down and stocks to open up Monday morning off 5%. But investors don't give a crap about any of that stuff. You think I'm going to sell all my shares, pay the commissions, and then cross my fingers and then maybe see if I can buy back in on Monday? This isn't an investor. This guy doesn't know the difference. That's a day trader. That's a speculator. That's a guy who's trading with a very small amount of capital, and they trade in and out of it all day and hoping to eke out a better return than the markets, which of course is a fool's game. Most of these guys end up losing all their money slowly, some quick, others will drag on for a few years, they get lucky. Remember, I've told you guys, 85% of the professional money managers, the best of the best, hedge fund guys, private equity, home office guys, cannot beat the indexes. 85%. The 15% that get lucky can't do it consistently. They get lucky for 1 or 2 years and then fall woefully behind. Yet they'll charge you an outrageous commission and management fees for the privilege of lagging the market. That's why I say just take the advice of Warren Buffett, the greatest investor of all time. Just buy the indexes and call it a day. These guys, these traders, speculators, they spend 5 days a week in front of a monitor and then probably spend another 10 or 15 hours, hopefully on the weekend, doing research. The way to do it is what I tell you guys. Get a good career, move up the income ladder, start your own business, start a side hustle. Hopefully you can start getting into 6 figures or more, and then take 10 or 15% or more and invest it into the indexes. You don't have to, I spend a total of about 3 hours a month on my portfolio, and I've got a big portfolio. It runs itself. Every couple of weeks I'll buy some more shares from the dividend cash that comes in, but I don't need to do anything. I don't trade in and out of stock. And I can probably guarantee that I'm beating the returns in most of these speculators and trader guys. Most of them end up going broke. So know the difference between the game. That book I've talked about many times, The Psychology of Money by Morgan Housel. Everyone should read that book. The best part in there is where he talks about knowing the difference between the game you're playing and the game who you're listening to. A lot of these guys you listen to on TV, on BNN, they're there for entertainment purposes only. These guys are traders, they're, riverboat gamblers, most of them. You're an investor. You're not playing that get in this, sell that, hedge this, economy's going, get in front of everything, sell it, sell your stocks over the weekend because something bad might happen. Don't play that game. It's a big lie that they're feeding you guys. Stick to the game plan. You're an investor. Buy and hold, whether that's real estate or just simply index invest. That's the difference between an investor and a speculator. Yet so many people confuse them and call them all investors. David Eby, just finally, our premier, he doesn't know the difference either. He put in a flipping tax because he said that young families and first-time buyers are being outbid by flippers. They're not. There aren't any flippers out there. With our friction costs, you buy a one-bedroom condo, you need it to go up $50,000 just to break even after PTT and commission. What is out there, there's some renovators out there, and they are an integral part of this market. They do an incredible service. They'll buy a beat-up or dilapidated house or condo, renovate it, and then put it back on the market in hopes of making a bit of profit. And it's not a lot of profit. It's a tough game these guys play. You got to be a real pro to know what you're doing in that market. And most of them are skilled trades, so they can save on the labor. But flipping is non-existent. So he's another guy that doesn't know the difference either. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.